Here are today's top Singapore news stories, each in depth. Singapore has mandated 5 banks to manage its upcoming 20-year green bond worth $1.63 billion US. This landmark issuance marks another step in the city-state's commitment to sustainable finance, with the proceeds expected to fund green infrastructure and environmentally focused projects across the nation. The 20-year tenor is notably long for a sovereign green bond, signaling confidence in Singapore's long-term economic stability and its dedication to climate-aligned investment. The mandated banks will handle the structuring and distribution of the bond to institutional investors, both domestically and internationally. This move reinforces Singapore's ambition to be Asia's leading green finance hub, building on previous green bond issuances under the Singapore Green Plan 2030 framework. KPMG has released the Singapore Illustrative financial statements for 2026, providing companies with a comprehensive template for preparing their annual financial reports in line with the latest accounting standards. The publication covers key updates including new disclosure requirements under FRS 111 and guidance on revenue recognition, lease accounting, and financial instruments. For finance teams and auditors across Singapore, this document serves as a critical reference tool, ensuring consistency and compliance in financial reporting across both listed and private entities. The illustrative statements also address emerging areas such as sustainability-related financial disclosures and the impact of digital assets on balance sheet presentation. Metro Singapore, once a household name in retail, is closing its final stores, marking the end of an era for a brand that helped define Orchard Road's shopping heyday. Founded with a Hollywood-inspired name, Metro grew from a single store into a department store chain that anchored Singapore's retail landscape for decades. At its peak, Metro's stores along Orchard Road were weekend destinations for families, offering everything from fashion to electronics. The closures reflect the broader transformation of retail in Singapore, where e-commerce, changing consumer habits, and rising rental costs have pressured traditional department stores. The story of Metro is in many ways the story of Singapore's retail evolution itself. Singapore shares opened slightly lower as investors weighed global economic developments and their potential impact on regional markets. The Straits Times Index dipped marginally in early trading, with cautious sentiment driven by concerns over global interest rate trajectories, geopolitical tensions, and mixed economic data from major economies. Banking and property stocks saw modest declines, while technology and healthcare sectors held relatively steady. Market participants are closely watching upcoming central bank decisions and inflation data for signals on the direction of monetary policy. The muted opening reflects a broader pattern of investor caution seen across Asian markets this week. Mizuho Singapore's chief executive officer highlighted that Singaporeans' unique blend of Eastern and Western cultural influences gives them a distinct competitive edge in global business. Speaking about the firm's growth strategy in Southeast Asia, the CEO emphasized that Singapore's bilingual workforce, multicultural environment, and strong governance framework make it an ideal base for international financial institutions. Mizuho has been expanding its Singapore operations, viewing the city as a strategic gateway to the broader ASEAN market. The CEO noted that Singaporeans' ability to navigate both Asian and Western business norms allows them to bridge cultural gaps that other financial centers may struggle with, positioning Singapore as a talent magnet for global finance. Which of these stories caught your attention? Share your thoughts in the comments below and follow for more daily news updates.